So this is day 8 of me posting daily, and welcome back to this YouTube channel. I hope you have been learning well, and that is my happiness. So today we will be going through Wednesday 27th of May, New York session, and then we go through the Asian session. So I'm not gonna lie, I took a trade on Wednesday, this Wednesday. I think I had it somewhere. Let me look at it. I took this trade, let my laptop load, and then at Asian session, I wasn't in a good state of mind, so I just came to analyze the trade that I was in to see if I was still on the right bias. And then after analyzing it, I got out of the trade. So let me show you. So this is the trade that I took on Wednesday. You can see I took it on this breaker block on the 15-minute time frame, and you can see this is the one. Yeah, this trade. Okay, and where was I targeting? I was targeting the 4-hour fair value gap at this zone. So I will actually this trade ran against me, but I didn't take a loss. Because the moment I came at 20.00 at this time, I saw that my bias had already changed, and so I got out of the trade. But because I wasn't feeling well, I wasn't in a position to trade, I didn't wait for another entry towards the direction that I had seen. So I just went off the charts, but I'll also show you why I would have taken a trade here. Okay, so let us first analyze this trade. Okay, so let me delete everything here, and we start from the weekly time frame. Okay, so on the weekly time frame, where were we? We were still in a weekly order block here. That was the one which was still supporting price. And what had rejected price? It was this weekly breaker block. Okay, that is the one which had rejected price to the downside. Okay, and then at this zone we had the weekly order block. Okay, I always do this each and every day. I come to the charts, like on New York session, I delete everything, analyze it from the start, from the weekly time frame to the daily, to the 4-hour, to the 1-hour, to the 15. So this weekly order block had rejected price to push lower. Okay, and for us, we were targeting this weekly liquidity. Okay, but then price still had some momentum to the downside. So let us look at the daily time frame, what was happening yesterday. Okay, you can see at this zone there had started being some buying momentum, but unfortunately price broke to the downside at on Wednesday. Okay, and where did it break to, and why did it break? Because at this zone we had a daily fair value gap, liquidity. Okay, it had already swept it, but then you can see the magnitude and momentum, the selling pressure that was here. So you can't just enter anyhowly and start buying. Okay, you have to wait for good confirmations, otherwise you will be stopped out. Okay, so let me first mark the where the New York session was starting, that is 800. Okay, so you can see what was happening. This was where New York session was starting, but you can see the pressure, the selling pressure that is here. So we should go to the 1-hour time frame and look for what? We should look for a bullish engulfing candle, all 2 bullish candles, all 3 bullish candles, so that we can have a confidence that we can now buy. If we don't see those, then we are out of the charts. We are not buying. Okay, and what happened at 8? So price came, okay, this candle, this bullish candle, it went and rallied up to a daily fair value gap, not a daily fair value gap, but a 1 hour fair value gap. 1 hour, it formed a 4 hour fair value gap at that zone. Okay, then at before our time, price had come and tapped into the 4 hour fair value gap. Okay, so I look at the reaction. Does it have a reaction that shows that it will violate this 4 hour fair value gap, or it will not? It will respect it. And remember, a big POI from a bigger time frame, like a 4 hour fair value gap, will definitely come to violate a 1 hour order block or a 1 hour fair value gap. Okay, it has more strength than the 1 hour order block or the 1 hour fair value gap. Okay, and a 4 hour fair value gap can push price to another 4 hour point of interest. So if we have this 4 hour fair value gap and it becomes respected, where does it push price to? To another 4 hour POI. And do we have another 4 hour POI here? No, but here we have it. We have a 4 hour liquidity. Okay, so that should be our marker. Okay, so on the 1 hour time frame, what was happening? You can see first our price had come, reached the 50% of the 4 hour fair value gap. That was something strong. Okay, and then what had happened at 1900? Price had printed out a very bearish candle and it had engulfed the previous bullish candle. Okay, and then we can look at a 1 hour maybe point of interest that can support price. But when we look at these zones, there is no 1 hour point of interest to support price, because this order block is not valid. It is not a good order block. There is no fair value gap here. There is no 1 hour order block here. So definitely price will just come and violate this structure. Okay, so after seeing this bearish engulfing candle, I just knew that we are not continuing to buy, and so I cut down my losses. I got out of the trade. Okay, and journaled the trade as a break even. Okay, so now we can come to our 2000 and see what we would have done on Asian session. I've already told you I didn't trade. I wasn't in a good state of mind, and my edge tells me that if I'm not in a good state of mind, then the edge will not favor me. Okay, so remember, we had tapped into a 4 hour fair value gap that is strong, and then we had formed a bearish engulfing candle. And then the next candle that printed out at 2000, it didn't engulf this bearish candle. And there is no point of interest here to resist price and push it upward. So now we can come comfortably to the 15-minute time frame and look for a point of interest to push our price lower, and that will be our entry. So you can see this was a change of character on the 15-minute time frame. And is there a fair value gap here or an order block? Yes, there is an order block here. Okay, and then someone can argue that there is also an order block here and one would enter at that point. But then this is, we are selling, and this is a discount POI. Okay, because if we are selling, then any trade that we take, any entry, our best entries should be at this zone from this 50%, but this was at a discount. So definitely you'll not have come and put your entry here. Okay, you'll not have been taken out, but then you are just exaggerating your stop loss. Look, it is okay, 124 pips, but my best entry would have been at this zone, this order block, which came at what time? 2100. I also want you to go at your charts and look what happens at 2100, because I've come to note that some entries, most entries on Asian session come at 21:00, but times are changing. Okay, and also as most of the liquidities on Asian session happen at 21:00 or 22:00. That is where most of the liquidity takes happen at. So you can see the trade delivered well. Our stop loss below our 4-hour low, that is 560 pips, and a not stop loss but target, and a stop loss of 54 pips, a risk to reward ratio of 1:10. Look at how our strategy works. It is working nicely, delivering a good risk to reward ratio. So I want you to imagine this. If maybe you are trading on a prop firm, and then you took this trade, this sell entry, and risked 1%. Do you know that using only this setup that you would have already passed your phase 1? Just imagine that, okay? And it is a strategy that doesn't give you like that fear of maybe I'm not right, or maybe I've done a mistake, because it is you are first going through some steps. You look for an engulfing candle after seeing your direction, or you look for 2 candles or 3 candles, and then you go to the lower time frame. So I hope this is helping you and opening your eyes. So see you later.